Welcome to part 3 on Candlestick Charting Trading. This is the last in the series. So if you didn't get 1 and 2, I'll put the links down in the description below because this one does build on the first 2 videos. So today we're going to talk about something I referred to in the first 2 previous videos, which is that you need to use candlesticks in the context of the entire chart. Now, that means a lot of different things. Today we're going to focus on one, and that is support resistance levels. So candlestick patterns we want to look at, especially when we come into price levels of supply demand or support resistance as they're often called. And what we're going to do today is I'm going to quiz you. That's right, you're going to be quizzed. I know, it's panic attack. You just want to sit back and listen. Well, guess what? The market's going to test you when you get in there with real money. So you might as well be tested before you get in there with real money so that when you get in there, you can make some money and not lose it. All right, so here are the quizzes. I invite you to participate. By the way, if you'd like to really participate fully, go ahead and pause the video after each question that I ask. If you don't want to, that's cool, but I guarantee you, you will learn more if you do pause. Answer the question yourself. Even I would encourage you to write it down on a piece of paper. Write that answer down to commit yourself to an answer because it's so easy afterwards to say, oh yeah, I would have said that. All right, so let's jump right into it without any further ado. So here we go. We have a gap down. And here's the question. Based on the price formation, what would you expect to happen next? So I'm talking about right here. That bar right there. So today we're going to look not in the middle of the chart. We're going to do hard right edge of the screen stuff today. And that's where the quizzes are on the hard right edge of the screen. This is how we have to trade. So after this bar right here, what would you expect to happen next? That's the question. That's the pregunta. That's the fragen. I am trilingual with the word question. That's very impressive. Okay. But seriously, this is where you would pause, answer the question, write it down if you want to play the game hard. Otherwise, you can feel free to just listen. And here we go. All right, so what does happen? Well, let's go to the next slide here, and you can see what happened. So if you said, I think the gap would close, okay, you were correct. The gap did close. But more importantly than getting the question right is why? Why would you expect the gap to close? Well, let me tell you, here's why. So first of all, we have our good old friend, the rejection of value pattern. All right, so we've got the long wick down here. We've got it closing toward the top of the range of the bar, the top 1/3. So that means a rejection of value of these lower prices. So that's number one. Okay, so it's a bullish bar. Number two, the context of the chart, a couple things. Number one, it comes in at support. So the market had gapped down, obviously, and then it went sideways for a little bit. Came down, put in a low, came back up, came back down, retested that low. Now, here's the key. How did price action react to the retesting of that low? It rejected it. And how do we know we rejected it? How would we know on the hard right edge of the screen? Such as when I showed the quiz and asked the question. We would know by that price bar, the type of price bar it is, it's a rejection of value bullish bar at... Again, got to put it all together. Rejection of value at a support level. And then, of course, you can also add to that we've got a gap down. And where do we go? We go right back to the gap. And look, hits there once, hits there twice. And so the market, in fact, there we put in a bearish bar, a bearish rejection of value bar. So there you go. That is quiz numero uno. Oh my gosh, I'm just being very international today. All right, here's quiz number 2. So now, again, a hard right edge of the screen. What would you expect to happen next? If you want to play hard and really learn from this, go ahead, pause the video. And what do you think is going to happen after this? That's where you got to trade, hard right edge of the screen. What's going to happen next? And let's add the question why. I answered the question why on the last one. That's the real kicker, right? Because you can guess and maybe get 50-50. But to increase your ratio beyond 50-50, you have to have a reason why something would work and why it will continue to work in the future. This is what I call market logic. So here we're calling it price bar logic. But, yeah, okay, so you get it. All right, so what happens next? Alrighty, Well, let's rock and roll here. That's what happens next. Now, why? So if you said it would go down, okay, obviously you're correct. Good. Now we had a engulfing pattern. So this bar, the terms that we used last time were that the red bar negates the green bar before it. All right. So does it... So the term we used in video number 1 was, does it validate or invalidate, right? And so this is what we're seeing here. It invalidates. The red bar invalidates the green bar because it completely engulfs it, turns around, opens at the high, closes near the low. It's a wide range bar and closes near the low. Definitely the bottom third, definitely the bottom quarter, bottom like 1/8 or 1/16 of the bar. And then again, looking at price structure, we have a resistance level here, and we come up close to it. Now, does it touch it? Not quite. By the way, we're not drawing resistance off of highs. Why don't we draw resistance off of highs? Because the markets are a bit noisy and random when you got people all over the world trading all different methods, all different time frames, etc. So we can't look for support resistance at, the exact pixel on your monitor. That would be crazy. So support resistance levels are zones, and one way to accommodate zones in the market being zones is we look at the real bodies. We draw support resistance off the real bodies, and even then we got to say, you know what, even if it gets close, fine, that counts. It's in that general area, or that's the general zone. And then we get that rejection, that complete turnaround, okay, negates the construction of the green bar. And so it's close enough for government work, and bam, down she goes. And so that's the logic that I would put together on that one as to how I would determine that, yeah, we're putting in a double top there. And you might have noticed that. If you did, you get extra credit for saying it was a double top. All right, last quiz for today. So this quiz is, again, what is going to happen next and why. We're looking at the bar on the hard red edge of the screen. Making you work hard here today, but hey, that's what real trading is, right? We got to trade that bar. We don't get the luxury of hindsight in trading. So there's your quiz. Again, if you want to play hard and fast, go ahead, pause the video here, answer the question, commit it to writing, and then start back up. So here is the answer. Let's see here. There we go. Dealing with a little technology here. All right. So now what happens next is, of course, the market does go up, but again, why? So this was the bar that we were looking at. See, I've got the arrows there. I put those there on purpose so you can reference it and say, oh, that's where the bar was. That was on the hard red edge of the screen at that time. So here's why we would expect the market to continue going up after that bar. So number one, it's a wide range bar from high to low, closes near the high, right? Those are our two big parameters. Is it a narrow range bar? Then it's automatically neutral. If it's a wide range bar, okay, now it has significance. And where does it close? That is the key for direction. Now, here is the other thing, though. We're in the context of the chart does it occur. And that's our theme for today. And today, the context we're referring to is with regard to support resistance levels, previous levels where the market found a shift in supply demand. And it found it over here. It found it over here. And so therefore, you should put a horizontal line there. And the key on this one is that that green bar sliced right through it and closed above it. It closed above it. So strong bullish bar, strong bullish move, and did not pause at resistance. So the market is slicing. Notice the word slicing. We use the capital letter ones there because that's more dramatic. And then we look for it to go to the next resistance zone. Now, you might say, oh, that could go either way. It could, but that's one strong indication, right? Because look, if you look over here, in fact, just so happens that we have a nice example here on the same chart. So notice over here, we have a, whoops, I grabbed the wrong one, a wide range red bar. You know what? I'm going to do that in blue, a little easier to see, I think. So here we have a wide range red bar. So wide range from high to low. Again, closes near the low, so that's definitely a bearish bar. But now, look at it in the context of the chart. So if you're just going to read that bar alone, you would again say, okay, that's a bearish bar. You would be right for the length of one bar for that period. What is that? 5-minute chart? Yeah. So for 5 minutes, you're right. That is a 5-minute bearish signal. Problem is, where does it come in? It comes in right at previous support. And it doesn't slice through it, right? It stopped there. It stopped there. If it had closed way down here, then I would say, okay, maybe this thing will follow through. But it didn't. And that's why we have to take these in the context. So combining support resistance with extreme candlestick patterns, that's the key. And obviously you can add other things to this, the more things you add, the way I look at it is preponderance of the evidence. There's no one thing in trading that will make us money. There's no one indicator. There's no one candlestick pattern. There's no one support resistance level. There's no one nothing. So we are looking for, it's like putting together a legal case, preponderance of the evidence. And just like in a legal case, they're looking for uncorrelated pieces of evidence. And in trading, that's the same thing. We look for various things that are uncorrelated. When they all align, bullish or bearish, that's when the odds are on our side. That's when we have a probability. That's when we take the trade. So if you like this video, if you like the series, hey, give it a thumbs up and also write down any comments below. Encourage me to create more free tutorials for you. I don't sell any advertising on my YouTube channel. I could. I've been approached to do it actually, and I've turned it down just because I don't want to interrupt the flow of the tutorials. I'm here to teach you and not to sell to you. So, oh, and by the way, also, if you'd like to share it with other people for free, again, click the thumbs up icon below, and then also click the beautiful little share button below. Share good things with good people, and let them have access to the free tutorials. I've got over 150 videos on YouTube now. It's on my contribution to the trading community. And if you also want to get one of my courses, guess what? I'll give you that for free too. What the heck? Just click the nice little green box up there in the top right-hand corner, and that'll give you access to a little mini trading course I've got. It's 5 videos. They're a little longer than my YouTube videos. They're about 30 minutes each. And you get 5 of them. And in that course, you also get a really big value, which is one of my trade strategies. A very specific trade strategy where you get everything. Where I get in, where I get out, where I place my stops, all that stuff. It's called the rubber band trade, as you can see in that little box up there. And so I give you that trade strategy absolutely free. And by the way, it's still a really, really good trade. I still trade that every single time it sets up myself. So it's a super high win-loss ratio trade, which is why I love it. I personally, from my trading psychology, I love a really good win-loss ratio. So if you do too, go ahead and access that trade.